Lots of my people against FX here. Today we are going to touch on the topic I titled Key Candlestick Patterns Every Forex Trader Should Monitor. As a Forex trader, there are certain candlesticks that you must know, and you should, once they appear, you should know what they stand for. Because it's the candlesticks that does what represent the activities of Forex trading, or what is going on in the Forex market. Is the candlesticks that represent both the buyers and the sellers alike. The only thing you will see in any platform is candlesticks. Be it you a buyer or a seller, once you open your chart, is the candlesticks that is going to be representing the activities that is going on in the Forex market. So at every point in time, there will always be a candle that is printing. It's either the candle is pointing up, that means the price of the asset is increasing, or the candle is pointing down, that means the price of the asset is decreasing. All right? So it is very, very important and key for you to know some very important candlesticks as a trader. All right, because once you see a particular candle printing, not anywhere in the market structure, but there are key levels that you need to watch out for all those type of candles. It can be everywhere. The candle can be printing everywhere, but once it appears at a particular level, just know that a change is about to happen. All right, just know that it's giving you a heads up of what is about to happen. All right, because if a trend is bullish and you get to a resistance level where the trend is about to turn to become bearish, it will have to give you a formation. And those formations are what? Candlesticks. It will not tell you, hey, I want to start going down now. The price of asset want to start going down. No. Once it hits a particular resistance, then you will see candles will appear. That type of candle, once you see it, professionals know. Once they see that type of candle, they know that there's going to be a turn of event. All right, so today I'm going to be teaching you guys the real key candles that you need to take note of as you continue your journey as a trader. Even though you are a professional, this video too will help you refine your trading career. All right. So the YouTube name is Against FX. Then my website is againstfx.com. The YouTube, go in there, subscribe, please. Activate the bell sign so that as soon as a new video is released, most especially this period that we are having 1 month crash course that I'm giving for free. Nobody's paying for it. It's a free training that I'm offering you people. As a beginner, You are looking for a way to start learning how to trade and you don't know how, this is an opportunity. This is what you've been praying for. I'm giving you for free. What you just need is your system. You have your internet connected to it there so that you have access to YouTube. Open the YouTube, my YouTube, subscribe. Once you open my YouTube, it gets FX, subscribe. Then you go to the playlist, which I titled Beginners Free Course. Beginners Free Course. From A to Z, everything you need to become a forex trader is in there. I've already worked on the videos. I took my time to teach and I've uploaded all those things there. And today, we still continue till the end of this month. By the end of this month, I want to believe that you should be able to start practicing, or if you have been following me right from the beginning, when we started off, today is 19, now day 19, we even started before the beginning of this month. All right, we started even a week before, towards the ending of August. But that being said, if you have been following me up till now and you've been watching all those videos I've been releasing, all my teachings, I tell you that by now you should be practicing. All right? You should be practicing because I've already shown you the steps on how you can download TradingView or MT5, whichever one you choose, then connect a broker. Choose any broker of your choice. I don't promote any broker. I'm not even interested in promoting any broker. Choose any broker of your choice. Before you choose any broker, please go and do your research. Go to Google and research about the broker. Then you connect the broker to your MT5 or your TradingView. Before you do all those things, as you download TradingView and MT5, you create account. MT5, you don't need to create account, but TradingView, you need to create account. Then by the time you are linking your platform to a broker, a brokerage firm, then you need to create account in the brokerage platform. All right, so the broker will now open an account for you, put in money for you to start practicing and learning how to trade. That is how it works. You will just be practicing with the money that are in there. All right. So that being said, we are going to go through some slides so that we understand what we are talking about. Now we have key candlestick patterns every forex trader should monitor as you trade. Number one is the inverted hammer. Inverted hammer. When we say inverted hammer, we are simply saying something like this. Something like this. And what is the story? Now, this is a trend, a bearish trend that was on. A bearish trend like this. If you have not watched the difference between bullish and bearish and where the bearish candle opens, where it closes, where the bullish candle opens, where it closes. If you have not, please go back and watch that video so that you will understand what we are saying. Now, this trend was bearish. You now go to this point, then this candle now opened here. You remember, bullish candle opened from the bottom, while bearish candle opened at the top. This candle opened here. After this candle closed, this candle opened, then sellers still push the price to the downside. And when it got here, it got rejected by the buyers. And what happens? They now started pushing the price to the upside. They succeeded in pushing the price up to this level. This is what we call anatomy of candlesticks. All right, the story behind every candlestick you see. If you have not watched that video, I suggest you go and dig out that video. Then you will understand the stories behind each candle as they print, because each candle tells us or tell us as a traders story that is ongoing as the candle is printing. All right, it gives us information of what is happening between the buyers and the sellers. All right, in the market, in the forex market, we have the buyers and the sellers. All right, that is what is going on. If you go to our supermarket or any marketplace, you can go there as a buyer. Then people who sell, they are there. So the two parties is always buyers and sellers. So right now, this at this candle, what is telling us is that sellers, when the candle initially opened, sellers push the price to the downside. They wanted to continue pushing the price to the downside, but buyers rejected the price from at this level, and they now started pushing the price up. As it's going up, it means the asset price is increasing. All right, the value is increasing. They now started pushing the price to the upside. And when they now got here, sellers now stopped the price from here and now started rejecting the price. They rejected the price up to this level before this time period now close. Now, we have already treated time frame. All right. The time frame you have 5 minutes, we have 1 minute, we have 3 minutes, we have 10 minutes, we have 15, we have 30, we have 1 hour, 2 hours, 3 hours, 4 hours, we have daily, we have weekly, we have monthly. All right. So what does that mean? If you choose 4 hour time frame, it means that this candle will continue to print until 4 hours is complete. If the same candle, if you are on a 1 hour time frame, it means that each candle you see represent 1 hour. They are going to print, it's going to be printing information like this until that 1 hour is complete before another candle will open. If you decide to choose daily time frame and you want to be trading on daily time frame, meaning that each candle, one candle represents a day. Only one candle will print daily. I hope it's very, very clear. So as at the time this candle now, sellers now rejected it up to this level. And what now happens? It now closed leaving little body like this. And this point here is a support level, a very level that is very, very essential, a crucial level. All right, it's an important level. All right, because the trend was formerly bearish, it now got here. Now it is now time for price to start going to the upside. This is a complete reversal. So once you see something like this at a support level, I told you guys support level is where buyers wait for price. Resistance level is where sellers wait for price. All right. This point here is what? Is a support level. Price now got here. Buyers are now rejecting the price. They want to push the price to the upside. All right. So even though buyers entered from here and it succeeded in pushing the price up to this level, but sellers still they rejected the price up to this point. At this point in time, you now discover that from here to here, sellers could not chop off. Rather, they could not push out buyers. They could not push out all the buyers. They were flexing their muscles until when they now got here, they now got thrown out. It means that when it now closed like this, it closed bullish with a wick facing up, all right, like this. This is what we call inverted hammer. Inverted hammer. So it's a very, very important sign or candlestick for you to really know. I've told you guys the story behind it. All right. Now, immediately this candle closed, the next candle should open at least where this candle closed or a little above it. You don't want to see this candle coming to open down here. No, it has to go above it. Immediately it opens. You see what happened. Fat body. That means buyers entered because they battled with sellers, and at this point they throw the sellers away. So buyers now overpowered the sellers. When the next candlestick, when it open, you see the full force. It is a sign when this kind of thing happen, you see an inverted hammer at a particular level. What are the levels? Support level. Support level. Not anyhow place. Support level. All right? Once you see it appear at a support level, wait for it to close. Once the other one opens, just place your trade. That is a reversal. All right. So after that, you see a bullish candle, another bullish, you just see price going, flying to the top. That is how it is. This is what we call inverted hammer. All right. Let's let's move to the next slide. Then there is what we call hammer. All right. Why I'm showing you guys all these things is because this is what you will see often anytime there is a reversal or anytime that there is a change in direction of trend, most especially at a support level or a resistance level. these are levels where you will watch out for those important candlesticks, all right? Not anyhow place, all right? The key levels, support and a resistance level, all right? Just like when there's a bullish trend that is going up, if it makes pullback, it's going to stop at a support level. And the sign that you will always see that the pullback has ended, like I've told you guys, you will see a rejection of price. It might not be as clean as this, all right? It might not be as clean as this, but you will always notice that there's a rejection of price. So all these things, if you know them, you always recognize them while you are trading as a trader. On the chart, you always recognize all those things. All right. So this very one here is a hammer. And now the hammer, the story behind it is that price is like this. It's been bearish. Price has been going down. All right. Sellers has been pushing the price to the downside. It now got here. All right. It now got to a support level. All right. Now buyers now rejected it. That is the story behind it. Buyers now rejected the price from down here up to this level. Then the time period was now over. Then the next candlestick you will see will now open above this candle. Then it might now look like this, or even though it looks like this, it's still closed bearish. Excuse me. Even though it closed bearish, but this is a sign of buying pressure, meaning that buyers came into the market and they are driving the price to the upside. This is a clear sign that buyers are in the market. Once you see something like this at a support level, you see one candle that was pushing to the downside, you see a very massive rejection like this, it tells you that buyers are in the market. What do you need to do? Wait for this candle to close. The next candle will now confirm the reversal. I bet you the next candle that will open will be a bullish candle that will now start pushing the price to the upside. As simple as that. The story behind it is that the price was going down. The price went down up to this level. That means sellers pushed the price up to this level. Then buyers now came and took over the price, took over the battle, and said, okay, guys, this price is too low. It's okay here. They now entered and now start pushing the price up. By the time the price is now going up, meaning that buyers are now in the market. It is time for them to take the price higher. So that is what it means, why this one is called hammer. All right? It's as clear as anything you can think of. Now, here is another one. We have the shooting star. All right? A shooting star is just like a hammer, but you see, this will always happen after a bullish run. You find this very one at a resistant level. Remember, this very one will be at a support level, that is the downside, or anywhere that there is a support. When we mean down, We are simply saying anywhere that there is a support, that price created support. Then this very one, we are saying the shooting star always appear, this candle always appear at a resistant level. All right? A resistant level after a long period of a bullish push. All right, the price of the asset has been going up, going up, going up, going up. It now got to a place which we call a resistance level where sellers wait for price. All right. Once the price got to that point, what happens? For example, let's use this one. It's been bullish. All right. Price started going up, 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 up to this point. Sellers now entered. They were waiting for price patiently to get to this point. Immediately price got here, they entered and they started pushing the price. Once you see this at a resistance level, you know that sellers are in the market. They are crazily pushing the price down. All right, this is what we call buying pressure. Is sorry, this is selling pressure. Selling pressure. Why this very one here is buying pressure. All right, buying pressure. This very one here is selling pressure. And you see, as they were now pushing the price to the downside, then the time period was over. The candlestick now closed like this with leaving little body. Then the next candlestick you will now see will be the one that will now gap a little down. Then it will now be a full-blown bearish candle. It will open at the top here and we see price pushing to the downside. All right. Like this one, yes, yeah, it was bullish before because buyers were in the market. They started pushing the price. It's the same thing. What it means is that it can, at the end of the day, it can close bearish like this, or a bullish candle that was full up to this level. Sellers entered and pushed the price to the downside up to this moment, up to this level, and the candle will now close very little with a little body, but a bullish uh, with a bullish body like this. It means that by the time the candle closed, there were still buyers in the market. There were still buyers in the market. So once something like this happens, all you need to do is for you to wait for confirmation, wait for the next candle to open. Once the next candle open, you see that it will open and there will be some buyers before sellers will now come, take over, they will now start pushing the price down. I hope it's very, very clear, rather. It's very, very clear. So I promise before I started this program, before I started this free course, I promise you guys that I will always make everything very clear and simple for you guys to understand. Because I know when you are stepping into a new field, it's a new ground entirely, it's a new experience. So it's always going to be overwhelming and it will look very difficult and complicated. But the way we can make it more enjoyable and simple is to explain details and using a very simple language that everybody can understand. And that is exactly what we are doing. The next one is what we call gravestone dodge. When we say gravestone dodging, we simply means that, okay, a trend has been bullish, all right? It has been bullish. And don't forget, this is always found at a resistance level. It shows that the bullish trend is about to change to become bearish trend. All right. So price was bullish. Remember, before this last candle, all right, the last candle pushed up to this point, but sellers rejected it. That is first point. It now opened again. Immediately open, sellers try to push the price down. Buyers still overpower them, and they now continue pushing the price to the upside. When the price finally got here, what happened? Sellers now entered with full force, because this point was a level where plenty others were here waiting for price to get to this level. Coupled with those who are using instant execution, immediately price got here and we rejected a little. You see people entering the market to push the price down. So price rose up to this level, then sellers aggressively took the button and they now started driving the price to the downside. And at the end of the day, when it now got here, it closed with a little body, closed bearish. All right. So when the next time frame now open, the next candle opens here, immediately it opens, there were still buyers. Some buyers came in, tried to push the price again up, but sellers rejected it at this level and they now took over fully before they now started pushing the price to the downside. Where will you be looking out for this kind of formation, this gravestone doji? At a resistance level. All right. It then means that the price has been going up, the price of an asset that has been going up. Then when you now go to a resistance level, you will now see this formation. You will now see this formation, gravestone doji. Once it appears at a resistance level, remember, at a resistance level, then you know it is now time to change your bias. You've been buying before, now you should start looking for an opportunity to sell. That is why I said you must. The things that are very important in trading, number one, you must know how to perform your top-down analysis, all right, before you can take any decision. Number two, you need to know how to read market structure. All right. Number three, you must know candlesticks. You must be able to know what candlestick anatomy is all about. Each candle tells story, and you should be able to know, okay, this candle is telling me this, what is happening now. It's telling me that, okay, buyers are in control, or it's telling me that sellers are in control. If you are able to know what candlestick anatomy is all about, you will not have any issue as a trader. As a beginner who is just coming into the field, you will not even have stress. All right? You will not have stress. All those things, you must learn them. You must know how to read structure. That is foundation. Before you now start talking about risk management, but you must have the foundation first. Know the real thing first. That is knowing how to perform top-down analysis, starting from the higher time frame, scaling down to your time of execution. That will give you heads off. It will give you the actual point where you should wait for price before you get involved in the market. That is the essence of top-down analysis. It will tell you the opportunity that is available, that you have to get into the get into the market. Then the market structure, it tells you the buyers and the sellers, their sentiment. What is going on? Is the asset appreciating or is coming down? All right. If it's rising, okay, this is a bullish trend. If the price of the asset or an instrument that you want to trade is dropping, is coming down, okay, this is a bearish trend. If you don't know all those things, how do you want to trade? So you must know how to read market structure. You must know how to perform top-down analysis. It's very key. You need to know it. Not just knowing a little, you need to know it all. Then candlestick anatomy, the important ones. Once you see a candle, it's telling you a story and you just know. All right. If it's the one that is okay, it's just a dodgy candle, okay, that means it's indecision. Both buyers and sellers, nobody wants to take the price to the next level. Then you wait. That means it's telling you, oh, if it's consolidating, okay, big boys are doing something because consolidation is good. Because once there's a breakout, it's always crazy. All right, once there is consolidation, then you do your top-down analysis and wait for breakout. Do you understand? So when that time of consolidation, okay, it's consolidating, okay, price is consolidating at this level, okay, then you do your risk management properly, then wait for price to tell you where it wants to go next. So it's very, very important. So the next one is bullish and bearish engulfing candle. Now, this bullish engulfing candle, it simply means that the price of an asset was bearish. Then at a support level, the bullish candle now appears. All right, it now appears. Okay, you now see, as it was coming down, it pushed up to this point, then sellers rejected it up to this level, and buyers rejected it up to this level. That is to tell you buyers are in the market already. But when this one closed and this next candle opened, immediately open, sellers try to push it again to the downside. But buyers now overpowered them and now started aggressively pushing the price. You can imagine 100 people against 10 people. So buyers now aggressively stepped in and they now, because when he now got to this point was when he now got to the level where plenty buyers are just waiting patiently for the price. Immediately he touched this point, he now started seeing a massive push to the upside. And at the end of the day, the bullish candle now engulfed the bearish candle. And as it was pushing to the upside, it now got to this point, sellers still entered and tried to push the price to the downside. But at the end of the day, it closed above, it engulfed the candle, the bearish candle. So the next candle that will now appear again will now appear and started pushing up. That is what we call bullish candle, bullish engulfing. It will engulf the previous candle. That is a sign of buying pressure. It tells us, okay, buyers are in the market. All right? Buyers are in the market. So you just be waiting patiently for the candle to close, then you now enter. All right? So the next one, the reverse is the case. All right? A bullish candle, like this one, will always appear at a support level, while this one will appear at a resistance level. All right? If you don't know what support and resistance is all about, I've already made video about it. So go and watch it so that you understand what we are saying. And at this point, if you have not subscribed to my channel, please do subscribe to my channel, my YouTube channel, Against FX. And please visit our website, againstfx.com. So the bearish engulfing candle simply means that once the trend was bullish, it now got to a resistant level. A resistance level, guys, is a level where sellers will always wait patiently for price to get to. And as soon as price get to that level, what they will do is to start pushing the price to the downside. All right. The resistance level also is also a level where reversals always happens. All right. Once price of an asset gets to that level, yes, there's every likelihood or tendency for a price to reverse from there. So once the bullish move gets to a resistance level, sellers will enter and start pushing the price to the downside. Based on the analysis I gave here, the explanation I gave here, you can now see this very one push to the downside and it has engulfed the previous bullish candle. So it's a sign that sellers are in the market. All right. What you need to do as a trader, you wait for this candle to close because this is a selling pressure. All right. It tells us that sellers are involved in the market and they are ready to push the price to the downside. You wait patiently for this candlestick to close, then the next candle will now open below this level, a little down, all right, giving a little gap, then you will now start seeing a massive push or drop to the downside. So I hope by now we should understand all these important candles that we should watch out for and the levels where we should expect all those candles or the level we should watch out for them. All right, as we see them at those levels, you just know that, okay, something is about to happen. And as you do that, you discover that you take your trading journey or your trading career from one level to the other. So guys, this is the end of this slide, and please join the journey of grace. If you get value from this content, don't forget to subscribe, like, share, and leave a comment to encourage others. Your support helps spread the message far and wide. All right. God bless you richly. So let's go to the chart. Let me just show you some little examples so that you understand what we are saying. For example, you see this? This is a hammer, complete hammer. You can see that price push all the way to this downside. All right. And at the end of the day, sellers and buyers rejected it like this, rejected the price to this level. And since then, you see a push to the upside. So it's as simple as that. All right. As simple as that. You don't need to see them beautiful as you see them on the slide. No. Like this point, you can see this. You can see this one as well. After this push, this is a pullback to a support level, and now price is pushing to the upside. As simple as that. We don't need plenty explanation again. I don't now need to tell you the story because I've already told you the story. So now you see, this is what we call a bullish engulfing candle. Bullish engulfing candle, this one here. This price was coming down, the price of an asset that was coming down He now entered, he got to this point. You can see there was a rejection even before this one opens. Then this massive candle engulfed this one. It's a sign that buyers are in the market. And when you now see a pullback, the next thing you see price going to this side. All right. When we talk about a support level, these are support level, support level. All right. Anywhere you see a push, a bullish run, then a pullback. A pullback is a support level, while the high, before it start pushing to the downside, is what we call a resistance level. This point is a resistance level, pull back to a support level, pull back to a resistance level, pull back to a support level, pushing to this side a resistance level. So what is difficult? Push to the outside, pull back to a resistance level and support level, push to the upside now. So like I told you guys, for a support level to be valid or a resistance level to be valid, there has to be more than two opposite candles. All right? There has to be more than two opposite candles. All right? So that is just it, guys. It's as simple. If you follow what I am teaching you guys, I bet you'll be at the comfort of your house. You will learn how to trade, and you will just get yourself involved in the market, and you will just see yourself trading. And apart from that, once you have started trading, then you now need more uh, in-depth of trading. You want to learn more based on the value you have already gotten. All right, you want to build on what you have learned, the foundation. Then you can, if you like, it's not compulsory. You can contact us so that we train you more. We take you to another level, because in financial market, we learn every day. All right. And for you to uh, continue to acquire experience and knowledge, that means you have to be practicing it. Just like any other field. All right. If you're a doctor, if you're a medical doctor, after your graduation, you go and do your housemanship and all that, then you now start practicing. As you are practicing, you are gaining more experience. Any field at all is like that. So thank you so much. On this note, I ask you guys to subscribe, share my videos, like and comment. I'll see you again next time. God bless you.